Greetings, everyone. At HDB, Hellenic Development Bank, we're more than just a financial institution. We're a driving force behind the growth and success of small and medium-sized enterprises. Our core mission is to design, implement, and manage specialized financial initiatives that empower entrepreneurs through financial instruments. How do we do it? By weaving together resources from the European Union, our national reserves and strategic partnerships with financial intermediaries and commercial banks. We fabricate impactful financial solutions uniquely designed for our entrepreneurial community. But we're more than just a bank. Our business model is multifaceted, covering a range of functions aimed at fostering economic growth and development. From the design and management of portfolio funds to the development of loan and guarantee schemes, we are dedicated to finding creative ways to support SMEs at every stage of their journey. Every facet of our business is dedicated to fueling economic growth and nurturing development. The role of the Hellenic Development Bank is being strengthened. HDB is in the final stages of its internal transformation. The bank continues to develop new and innovative programs and collaboration covering the needs of Greek companies, facilitating access to sources of funding while paving the way for sustainable development. It has now shown that it is able to respond quickly and efficiently to the implementation of financial products that have a measurable impact on the economic activity of companies. In terms of numerical data, the establishment of the Hellenic Development Bank dates back to 2003. Over the course of its operation, it has played a pivotal role in facilitating the issuance of more than 120,000 loan and guarantees, resulting in a cumulative principal loan amount dispersed surpassing 16 billion euros. At HDB, entrepreneurship isn't just a box to tick. It's our heartbeat. We are on a relentless mission, champion the dreams and ambition of Greek entrepreneurs, driving economic growth and building a brighter future for generations to come. Currently, we manage more than 10 portfolio funds, each playing a vital role in driving economic progress. As we reflect on the tumultuous journey of 2020, it is evident that the Hellenic Development Bank faced extraordinary challenges head-on and emerged as a beacon of resilience and support amidst an unprecedented adversity. In the wake of the COVID-19 pandemic, our commitment to the Greek business community was unwavering. We recognized the urgent need to provide vital assistance to enterprises grappling with the economic fallout of lockdowns and disruptions. Thus, we swiftly implemented a robust credit guarantee program, offering low-interest loans and flexible repayment options tailored to the immediate needs of businesses across sectors. The impact of our initiatives was profound. The surge in our clientele from 9,000 to an outstanding over 30,000 speaks volumes about the pivotal role we played in stabilizing the economic landscape during a time of upheaval. We became a trusted ally for businesses navigating uncharted waters, a testament to the trust and confidence they place in our institution. But our response didn't stop at financial assistance. Recognizing the imperative to adapt to the new normal, we embarked on a digital transformation journey, enhancing our technological infrastructure to ensure seamless service delivery. From the implementation of a state-of-the-art Know Your Customer platform to the expansion of online banking services and virtual consultations. We embrace digital innovation at a cornerstone of our resilience strategy. Moreover, we understood the power of collaboration in times of crisis. By forging strategic partnerships with fellow financial institutions, government bodies, and international organizations, we amplified our impact and shared resources to provide comprehensive support to the business community. Yet, amidst the urgency of the moment, we remain steadfastly focused on our long-term vision for a sustainable economic recovery. investments in Greek technologies, digital infrastructure, and transformative projects laid groundwork for a future that it is not only resilient, but also environmentally conscious and forward-thinking. As we stand on the threshold of a new era, let me carry forward the lessons learned from the trials of 2020. Financial crises, as we have witnessed, create a boisterous environment characterized by economic instability, market volatility, and heightened uncertainty. In such challenging times, the risk landscape to businesses undergoes a profound transformation, presenting unique challenges that demand innovative solutions. In 2003, the Greek government responded to the needs of small and very small enterprises with the creation of the Guarantee Fund for Small and Very Small Enterprises, TEMPME. TEMPME was pivotal in facilitating access to credit for SMEs, vital to Greece's economy. As the war emerged from the 2011 financial crisis, TEMPME transformed the National Fund for Entrepreneurship and Development, ETEAN, tasked with managing national and EU resources to revitalize the Greek economy. Throughout economic recovery, ETEAN remained a steadfast supporter of businesses. By 2019, evolving yet again, ETEAN became the Hellenic Development Bank, HDB, broadening its scope to better aid Greek enterprises. The global pandemic of 2020 tested the HDB's mettle, and it rose admirably, providing crucial support to businesses of all sizes. By 2024, HDB had firmly established itself as a cornerstone of Greek economic development, managing a diverse portfolio of resources and promoting sustainable growth. Today, the Hellenic Development Bank stands as a symbol of resilience and innovation, embodying the Greek spirit of perseverance and driving forward a vision of economic prosperity. Financial crises disrupt funding, challenging businesses, especially MSMEs. Banks fearing defaults, tightening lending, leaving firms struggling. Downturns reduce consumer spending, hitting consumer-facing industries hard. This forces firms to adapt, seek new revenue. Crises worsen inflation, currency devaluation, and interest rate fluctuations, adding to risks. They coincide with rising unemployment and investor pessimism, disrupting supply chains and eroding trust. Businesses face operational risks like supply chain disruptions and regulatory uncertainty. Such crises demand proactive risk management, and the Hellenic Development Bank remains committed to aiding Greek enterprises, mitigating risks, and fostering resilience amid turbulent times. In conclusion, financial crises fundamentally alter the risk landscape for businesses, introducing unprecedented challenges that demand proactive and adaptive risk management strategies. As we navigate through these turbulent times, the Hellenic Development Bank remains steadfast in its commitment to supporting Greek enterprises, mitigating business risk, and fostering economic resilience. At HDB, we recognize that effective risk management is not just about mitigating potential threats, but also about identifying opportunities for growth. It is my honor to speak to you today as the Risk Director of Hellenic Development Bank about the pivotal role of risk management, particularly in the context of financial crisis, in our ever-changing financial landscape. Effective risk management is essential to safeguard our bank's interest and ensuring its long-term sustainability. At HDB, we recognize that risk management is not only about mitigating potential threats, but also identifying opportunities for growth. First, let's discuss enterprise risk management. ERM is a holistic approach that integrates risk management into every facet of our organization. During a financial crisis, risks are interconnected and a localized issue can quickly spread and impact other areas. At HDB, we have implemented an integrated risk management tool to address these challenges. Consider our large-scale credit guarantee COVID-19 scheme. We developed a centralized system to document and track all risks associated with this project, such as delays, cost overruns, and regulatory changes. We conduct scenario planning and stress testing to assess the impact of potential economic downturns, preparing robust contingency plans. This framework serves as a structured approach to identifying, assessing, and managing risks across the organization, covering areas such as operational risks, business impact analysis, business continuity plans, portfolios, credit risk, etc. Regular training sessions ensure all employees involved in the project are aware of risk management protocols and their roles in mitigating risks. Next, let's talk about risk policies. These policies are the foundation of effective risk management in a financial crisis. Well-defined risk policies ensure a clear, consistent approach to managing risks across the organization. At HDB, we maintain a continuous policy review and enhancement cycle. Following an economic downturn, we identified an increase in loan defaults and guarantee calls. A regular policy audit revealed that our existing credit risk policy needed updating to address the current economic environment. We consulted external experts to gather insights and best practices. A dynamic update mechanism was implemented to improve loan and guarantee monitoring. Finally, let's discuss risk assessment. Identifying, evaluating, and prioritizing risks are crucial, especially in a financial crisis. At HDB, we have developed a proactive risk assessment framework. Our SME loan and guarantee portfolio is critical to our business. We use advanced data analytics and machine learning to analyze repayment performance data, identifying emerging risks such as sector-specific downturns or regional economic issues. Quantitative assessments, including statistical analysis of default rates, are combined with qualitative assessments through expert judgment to understand broader market trends. For instance, if an increasing default rate is identified in the retail sector, we may develop a mitigation plan and offer support programs to struggling borrowers. Furthermore, we play a crucial role in promoting a culture of risk awareness and accountability throughout the organization. This involves providing regular training and guidance to staff at all levels, empowering them to recognize and address risks in their respective roles. Overall, at the Hellenic Development Bank, we are committed to embedding risk management into every aspect of our operations. By staying vigilant, proactive, and collaborative, we aim to navigate uncertainties effectively and achieve sustainable growth for HDB and stakeholders. As we gather here today, it's imperative that we delve into the intricate relationship between financial crisis and operational risks, and how proactive risk management can serve as our compass in stormy seas. In times of economic turmoil, operational challenges are magnified, presenting organizations with unprecedented hurdles to overcome. Financial crises bring with them a myriad of challenges that can significantly impact operational risk. Budget constraints and cost-cutting measures become inevitable, intensifying the pressure on resources allocated to operational functions. These reductions in resources can amplify the likelihood of operational failures and inefficiencies, from staffing shortages to technological glitches. Moreover, financial crises are characterized by heightened market volatility and uncertainty, making it challenging for organizations to anticipate and respond to emerging risks. Factors such as sudden market shifts, liquidity constraints, and regulatory changes introduce new operational challenges that may not have been previously accounted for. In this tumultuous environment, the strain on business continuity plans becomes evident as unexpected events test the resilience of our system and processes. But amidst these challenges lies an opportunity for proactive risk management to shine. At the Hellenic Development Bank, safeguarding the safety and security of our operations is our top priority. We have implemented a comprehensive risk and control self-assessment framework, engaging everyone in our institution in a collaborative effort to identify, assess, and prioritize actions to keep our ship sailing smoothly throughout turbulent waters. Through our CSA, we gain a deeper understanding of our day-to-day operations and where potential risks might lurk. By tapping into the knowledge and insights of our entire team, we identify risks specific to each area of our business and assess the effectiveness of our controls. From tightening existing controls to creating new ones, we're all about taking proactive steps to keep risks in check. But it doesn't stop here. Building trust and confidence is just as crucial as managing risks themselves. That's why we have implemented a proactive communication plan to keep stakeholders informed about our risk management efforts and business continuity measures. Transparency and timely updates not only reassure stakeholders about our financial stability, but also strengthen our reputation and resilience in the financial sector and beyond. In conclusion, proactively risk management isn't merely a strategy. It is a mindset that permeates everything we do at HDB. By embedding risk management practices like RCSA into the fabric of our daily operations, we demonstrate our unwavering commitment to safeguarding the interests of our stakeholders. Together, we can navigate through financial crises with resilience and confidence, emerging stronger on the other side. In the turbulent times where the seas of financial crisis rage, it is imperative that we steer our course with precision and confidence. Representing the Hellenic Development Bank, we are tasked with safeguarding the integrity and stability of the financial sector amidst the challenges and uncertainties of our time. At the heart of our journey through these stormy waters lies the principle of know your customer. KYC is not just a bureaucratic requirement. It is a lifeline, a beacon of stability and resilience in the tumultuous waters of economic uncertainty. It is more than just collecting IDs. It is about diving deep into databases, leveraging advanced technology and meticulously vetting each loan and guarantee applicant to ensure their credibility and eligibility. The KYC platform helps the bank verify the identity of the loan guarantee applicants. It is about cross-referencing information and painting a vivid picture of each guarantee or loan applicant's eligibility and credibility. This could involve evaluating factors such as the applicant's tax clearance, insurance clearance, business size, and geographic location to identify the eligibility of the business to take a loan or a guarantee, or for us, provide a guarantee. The Know Your Customer project implemented by the Hellenic Development Bank serves as a critical component of our risk management efforts. It acts as a defensive wall against financial risks, mitigating the threat of default and insolvency by ensuring underlying loans are extended only to financially responsible borrowers with a proven track record. Moreover, KYC serves as a frontline defense against fraud and money laundering, leveraging cutting-edge technology solutions to detect and prevent illicit activities. By embracing authentication and verification, we safeguard the integrity of the financial system and preserve trust among stakeholders. But KYC is not just about risk mitigation. It is also about fostering responsible lending practices. Through eligibility and credibility risk assessment processes, we ensure that loans and guarantees are extended only to financially viable borrowers with a capacity to repay. This not only fortifies the bank's resilience against the adverse impacts of financial downturn, but also promotes transparency and accountability within the financial system. As we navigate through these turbulent times, we have to remain steadfast in our commitment to integrity, transparency, and resilience. By embracing KYC practices as a cornerstone of risk management and governance, we can weather the storms of uncertainty and emerge stronger and more resilient than ever before. The KYC by HDB platform, which has now been active for almost a year, and enhancing the ability of small and small enterprises to access funding sources. The platform's operation started with a pilot program called Small Agricultural Business Loans and has now expanded to all new financial programs, guarantees, and loans of the Hellenic Development Bank. Already, more than 27,000 new businesses have registered on the platform, and so far, 12,000 loan and guarantee applications totaling 2.5 billion euros have been submitted. Financial crises wreak havoc on economies and financial systems worldwide. They cast us a shadow of uncertainty, disrupting markets and profoundly impacting credit risk. At HDB, we understand intimately how these crises can dramatically affect our operations and the risks we face. In times of uncertainty and volatility, our commitment to proactive risk management and data-driven decision-making has been unwavering. We have embraced innovation and technology to enhance our risk management practices, ensuring stability and resilience in the face of adversity. Our model consists of two distinct phases powered by machine learning techniques that have reshaped how we understand and manage risk. Let's delve into phase one, unsupervised learning for credibility clustering. Here, we embarked on a journey where the model is not provided with labeled data, but must find patterns and relationships within the dataset on its own. By analyzing diverse financial data from borrowers, our unsupervised model identified natural groupings or clusters reflecting different levels of credit worthiness. This nuanced understanding, devoid of prior labeling, has empowered us to gauge risk with unprecedented accuracy. Transitioning to phase two, supervised learning for credibility projection, we further refined our approach. Building upon the credibility clusters established on phase one, we developed a supervised learning model. By training this model on labeled data, it learned from the patterns identified earlier and projected the credibility of new loan and guarantee applicants. This classification has enabled us to swiftly and accurately assess the risk profile of new borrowers, enhancing our lending decisions. Our integration of these machine learning models has unlocked numerous benefits for HDB. Enhanced risk assessment allows us to make more informed lending decisions, ensuring the stability of our institution. Moreover, by customizing loan and guarantee programs based on the risk profiles of various clusters, we can better serve the diverse needs of our clients and stakeholders, promoting financial inclusion and supporting economic activities. Operational efficiency lies at the heart of our endeavors. The automated nature of machine learning models has enabled us to process large volumes of applications quickly and accurately, making our system scalable and efficient. Additionally, by embracing transparent governance frameworks and explainable AI techniques, we uphold the highest standards of transparency and integrity. In conclusion, our journey at HDB exemplifies resilience and adaptability in the face of adversity. By embracing innovation, collaboration, and data-driven decision-making, we have weathered the storms of financial crisis and emerged stronger than ever before. Thank you very much.
Thank you, Nikolaos, for exploring with us and sharing with us your risk management strategies and how it has been refined after the crisis. What I would suggest is first to take questions from the assembly, and tu le fais?
Good morning first. So I want to ask, how long does it take to enhance the risk management practices during or after the financial crisis? How long does it take? Maybe one of the European bank there.
Well, if we are talking about operational risks, in my opinion, we have to be proactive rather than acting after the crisis. So, in my opinion, in order to scan the whole operational landscape, it is better to spend around a year to scan all the operation, find the correlation of activities, and trying to mitigate operational risks, finding alternatives, and create business continuity plans. If we are talking about credit risks, I think that typical econometric models are not enough nowadays. We need AI and machine learning in order to understand hidden patterns and expand our financial inclusion. Because history has showed us that commercial banks don't take their tail risks. So we need innovative models, innovative approaches in order to expand their guarantee schemes to businesses that can repay, but commercial banks don't provide them loans.
Another question, please. Can you tell me what about the journey of change and revisiting the risk appetite of the bank during and after the financial crisis?
Well, for HDB, especially COVID-19 financial crisis, we changed the crisis to an opportunity for us. We triple or even made four times the guarantee scheme. As we said, we moved from 9,000 loan guarantees to more than 30,000. So it was an opportunity for us to expand and communicate with entrepreneurial landscape that we're here to stay. And our job is to do the job that commercial banks don't do.
Juste par rapport au votre processus de KYC que vous avez mis en place au sein de votre banque. Donc, ce que j'ai bien compris de la part de votre présentation, c'est que ce processus il est utilisé à la fois pour le risque, je dirais, de fraude ou bien de la lutte contre le blanchiment d'argent, et également il est utilisé pour la partie pour la maîtrise et la connaissance de votre client en termes de risque de crédit. Et cette modélisation, en fin de compte, il s'appuie sur des bases de données. Alors, ma question par rapport à ces bases de données, est-ce qu'il s'agit des bases de données internes? Ça veut dire qu'ils sont collectés par la banque à travers ses clients, ou bien vous vous appuyez sur des données externes et si c'est le cas, quelle est la nature de ces données externes?
Translation. You explained that your KYC platform was used for detecting fraud for AML purposes, but also for credit risk, and that you have made a modelization of all this. And the question was around the database that on which this KYC relied upon. Are there internal databases or external databases? And if external, on which sources, which are the sources that are used?
Thank you. A very good question. Some technicalities. We have connected with state databases. So once the applicant tries to sign into our KYC platform, then the platform retrieves data from tax authorities, from insurance authorities, and if the applicant gets the clearance that the applicant has paid the obligations, then it connects to the interbanking credit bureau database, which says if it is the applicant is stored as an entity to a black pool or the white pool. So we can, moreover, we can get data from the state about the size of the company, the location, the number of employees, a lot of different data that afterwards we use them for from statistical analysis to, or even to feed our machine learning models for credit risk assessment. Thank you.
Just a follow-up question on this. Since you have set up your KYC modelization, have you experienced a decrease in default rate, and especially in default rate for at the beginning of a loan? Because we know that fraud, all guarantee funds have a share of fraud. I don't want to come back to fraud now because we have a round table around COVID-19, and I think that all COVID-19 massive guarantee schemes have shown that you have a share of fraud in guarantees. But we know that when you default in the first 6 months of a loan, normally there's something that has been done wrongly. Not all the cases, but most of the cases. So have you seen that your KYC platform that you're using also for credit risk, not just for AML purposes, has been able to reduce that risk of, of losses at the beginning of our issues at the beginning of a commitment?
Well, I would say that the main purpose of our KYC platform is twofold. The top priority is to receive the guarantee applicants, and after the application is approved by us, then to push the application to the commercial banks. So what can we achieve with that? We can achieve that we're going to increase the financial inclusion. So before a KYC, we were blind. We didn't know why the number of borrowers was stuck to a limit, to a ceiling. I think that now we have the data, and we can push the guarantee applicants to the commercial banks, and we stay optimistic that we can increase the number of the enterprises that take a loan under our guarantee scheme. So after the benefit of financial inclusion, we use the data to assess the credit risk as a portfolio. And how can we get benefited from that is that we can design, we have the data, and we can design better programs that can assist the needs of the Greek entrepreneurial landscape. We believe in data, we believe in models. In order to have the data, we need platforms. And that's how we use them. And regarding the default rates, I would say that it is very early to have an opinion right now, especially because there are some long grace periods. But we stay optimistic because our aim is not to, not to increase the default rates, but to assist the entrepreneurs. So we have the tools, we have the data, and I think we can finally make it. Thank you very much.